What is going on, everybody? I thought I would go over the current state of the crypto market, see how things have played out in the last couple of days. Um, I believe it's safe to say that, at least using Doge as an example, and we were thinking Adam and Eve, double bottom, bullish pattern. Um, it appears it never even played out. So we took what we had at the current moment and um, we took a risk, took a chance. And if we were going to be bullish, then that's a pattern to be bullish off of. So since Doge did not even get up to the neckline of our pattern, which was right here, this would have been the neckline. This here would have been Adam, Eve, and the thought process was to come back up here to the neckline, break out, go back up. Nonetheless, that's not what we did, so this is invalidated. So it appears that we are just going to, the longer this goes on, it becomes increasingly more bearish, in my opinion. There's nothing really to look at here other than we're just getting a bunch of sideways chop. I believe a lot of people did buy off of this pattern. If this whole pattern was an Adam and Eve, this was a V-shaped recovery. This is a bounce. These are good short-term trades if you wanted to make one. Usually when price action falls out of a topping pattern, which this here it clearly is stalled out. Get on this Doge chart, and I have two different Doge charts, so they're very similar targets. But anyways, this here, the 786.42, that was the target, and you can clearly see it was because that's where price came up. And I assume, without even turning the indicators on, we probably were developing bearish divergence. This is a rising channel pattern. Broke below, came up, retested, trailed sideways, capitulated. So this bounce here would have told you we'd know. You never know how far these go other than maybe using this fib here and the fact that, but Doge did bounce off the 618. That would be a good trade. The risk reward was worth it. Anytime those sell off, there's usually a bounce, and this would be a place to take a chance on that. And if people had made that trade, they made out well. But nonetheless, this is what we were doing. We're trailing sideways. So, right now, all we're doing is at least for me, I'm waiting to see where this explosive altcoin season is at, because that's been the talk, and the timing is right in comparison to the last cycle. This cycle is a little different than last cycle, is because I believe that Bitcoin has already hit its target. Previous cycle, we had another 5-6 months before Bitcoin hit its target. So there's two conflicting ideas here, and we got to see which path it takes. Going over to Bitcoin, since Bitcoin rules the market and can destroy anything at any given moment. And not only that, Bitcoin dictates the altcoins. The stock market dictates the crypto market. The S&P, the Dow Jones, they fall over. I guarantee you Bitcoin is falling over, and at a faster pace than what, say, the S&P or the Dow Jones or the NASDAQ. This thing will just come crashing down, and it will drag down everything. So nonetheless, let's go over Bitcoin here, since it's going to be our leader in this, and see what Bitcoin's going to do so that we can have a good idea what altcoins are going to do. So if we go back and look at the price action on this uptrend, during during this uptrend, we know that Bitcoin always has a bear market. It bottoms out somewhere and then it trails up. The only pattern that really stands out to me is this pattern right here. This consolidation area. Then we had the election. There's the breakout, got us to the target. This pattern here is a descending broadening wedge. And if we want to know where targets are on chart patterns, just to give us an idea, and then we get confluence with fib targets. And not only that, we can use divergences and, couple all that together to see where we're going, possibilities of things happening. So this is a descending broadening wedge. And we can look at the first target. If, once this starts playing out and we start getting higher lows on every one of these sell-offs, up, down, we can start looking and going, you know what, this looks like it's wanting to go up, possibly break out for a higher target. So if we was going to take that chance, and let's say we seen this candle right here, that looks like that's a sell-off candle. That big wick right there, buyers stepped in, got price up. It never came below this. This move here would tell you that this very well could have been your last chance to buy in. You would wait for this move to play out, come down, and probably put your entry down in here. You got to give it time, or you can take the risk and wait. But nonetheless, this target here, we can look at it two different ways. The widest part of the mouth here at the bottom trend line to the top trend line, and we can extend this out, move that point, put it on top of the trend line, and you can see where the next target would be, which would be probably this candle right here. That was a target based off of this descending broadening wedge. That's one target, so we could mark that. There's the target, or put it, somewhere in here. This is just chart patterns, so it gets you an idea of where the price is going. It doesn't tell you the exact, but it gets you very close. Okay, so at this point, now we're trailing sideways. We're just working our way up to the 618. This candle here validates that this target here is accurate. Just by looking at that candle, 105,000 or 104,000 down to 92,000. So basically a $12,000 move in a day. That was a sell-off. Price recovered, got us back over the 618, and we got another doji candle at the top with a big sell-off. And now we're below the 21 daily moving average. But nonetheless, we can look at this here. We're up at our target. This here is a rising channel. Rising channel. Okay. At that point, we would go down here to the indicators. This move here, the breakout of this descending broadening wedge, you can look at the RSI, made a higher high. As price trailed on up higher, you can clearly see we're getting higher lows on the relative strength index. So we know that Bitcoin is slowly running out of momentum. The buyers, there is buyers here, but they're not, it's not the buying power that this has. So we know this is weakening, and we can expect to have a bearish breakout based off this bearish divergence. So now that we know that we've seen it played out, we'll zoom in here a little bit further and see where we're currently at. Maybe I should put this back on the daily. Currently on the daily, this is a 21 daily moving average. You can clearly see we broke out below. Now we've come back up. We've retested at 1, call it 2, 3, whatever. We're getting rejected off the 21 daily moving average. This is a bearish sign. There's nothing bullish really about this. And, we're trying to find bullish patterns to get us back above the 21 daily moving average. So we know that we're going to go, get into a time frame. We can make some patterns out of this. It looks like we're going sideways, but if we want to make a pattern out of this, just to kind of guess what this thing possibly is going to make, we can go something like that. At current, this looks like a bearish pennant to me. So, we're going with what we've got. Maybe the market, the people that are moving this market want the majority to believe this is a bearish pennant. Technically it is. There's nothing I can do about it, and I can't read the minds of who runs this market. But nonetheless, we're going to go with this for the time being. And at least on the 4 hour, you can clearly see we're under the 21 moving average. And it is respecting it. We went up to it, broke above. Now we're below it. If this is a bearish pennant, price can come back up here to the top trend line. It most likely will get rejected here because we got 2 points now. So the third point, everyone's going to know that this is where it's going to at least stall out. But nonetheless, if this is truly a bearish pennant and it does play out, we can look at where do we know the targets based on this bearish pennant would take us to if we're going to go down. So one of them would be, here's the flagpole, here's the pennant. And basically all we do is, if we was to break out here, somewhere in here, candle's up a little bit, so let's just call it somewhere right here, this bearish pennant would take us down here. And this is at 80,000. And we can mark it from here, let's call it to here. And if this is the breakout, and right there. Okay. So now this is a bearish pennant. Here's a couple of targets that are possibilities. And next thing that I'll do is start putting a fib retracement on these patterns. Now, being such a small pattern, I don't know if these here probably aren't going to line up with a larger move of Bitcoin starting clean back here at the beginning stage. So it's probably based off of this pattern, this move from this point to this point. We'll do a fib retracement. We're going to go clean from the very bottom. Find it, clean up to the top. And as you can see, it looks like this pattern here, if this is truly a bearish pennant, is clearly lining up with this fib retracement. We had a mark based off of this bearish pennant at 80,750. Well, the 382, 38.2% drop from top to bottom brings us down to 80,065. That's not too far off. There's a lot of confluence in that. Not only that, we've got a 23.6% drop, getting us down to 891. Our target over here was at, getting too much here. Yeah, 87,958. So 88,000. So you're about $1,000 off here. But nonetheless, these can be wicks down to this target. We get closings here. We wick here, maybe not fully touch it one way or the other, but they're too close to, they have too much confluence. So we're just going based off of what we've got. That's all we can do. Nobody's a fortune teller. and you can cross your fingers and hope and pray that things go up in your or go in your favor, but there's really no guarantee. And this is basically, what I've found to be the most reliable. These bottoming patterns here, you got to weigh out, your risk reward. And, things bottom, you take a risk, you go up. Maybe it works out, but it breaks down, Me personally, I will risk a little to make a lot. If I have to lose a little, that's fine, because in crypto, the reward, if going in your favor, extremely by far will outweigh the risk. It's better to take a small loss than to take a big loss. If this is really the top and Bitcoin starts cratering over and your altcoins are down 30-40%, it's not going to feel too good. I'd rather take 3-4% losses and get out of it, and maybe wait until we actually see something convincing that if we're going to be looking to make money on the upside, and get in then. So it's tough, No, there's no doubting or denying that. So currently, this is where I believe these targets are based off of, or based at. If this pennant the only way this thing can get really invalidated is if we break out above this top trend line and get back up here, and and going back to old highs. But the way I see it is at 618, that was the top. There's nothing in the history of Bitcoin that says that we go to the 786. If it did that, it'd be the first time, and boy, that would really throw people for a loop. I'm certain of it. And that's when people that are the most naive people make the most. It's very irritating because you've done such, you do a lot of research, a lot of time and effort to make certain you're on the right side of the trade. And, some people get lucky, and that's just the way it is. But this is the only way I know how to do it. So in the current state, Bitcoin is chopping sideways, looks to be filling in this pennant. It looks like it wants to go bearish. We can look at cryptos. I don't think it's really worth even looking at them, because the Bitcoin's going to dictate what they're going to do. We can look at Bitcoin dominance. Let's get back here on the daily. We know that, in my opinion, Bitcoin dominance has hit its target. We fell below the, let's turn on the weekly. Here, you can see we were riding the 21 weekly moving average, fell below it. Now we're back above it, and we are literally setting right on it. 21's at 58.05%. We're at 58.2%. Fell below it. It's broke back above it. We're sitting at it. People are indecisive at this moment. We don't know. They don't want to go all in on cryptos or altcoins, because if Bitcoin is getting ready to fall apart, all your investments start falling apart. So basically, this is a dead cat bounce. And if this is the time for this to start falling apart and it's going to become altcoin season, we need to see something here that is convincing, preferably below the 618, if you're going to jump in. Right now is a very risky time, but personally, I don't think the reward based on the risk is worth it. You can tell one thing that I've noticed is, at least within the United States, is that the market likes to push up in the middle of the night, and then by the time the majority is up, there goes the market. It started down. So, we were trailing up. Now we're down. What do we get? Some more chop sideways here again. Doge chart, it just doesn't, for the longer term time frame, doesn't seem really fitting that Doge never makes a new high. Going back into here in history, it has historically always made a new high. We haven't even touched the old high yet. But, the one thing that is throwing everyone for a loop, which I believe is kind of planted just to keep people sidelined and off track, is that Bitcoin has already hit its high, in my opinion. I don't think we're going to get much higher than we're, 108, 104. Bitcoin hit its target. Doge was already out at a new high, and then it went on up again. A lot of these altcoins haven't even hit their old high, and Bitcoin, in my opinion, has already hit its target. So it's almost like there just really isn't enough money in the market to keep everything, to push everything up. A lot of the money from Bitcoin, the Bitcoin investors, comes out of Bitcoin to go into the altcoins. But if there's no fresh money coming in, a lot of money's got to come out of Bitcoin to go into altcoins. So, these are all ideas. It doesn't have to play out that way, but that's just the way it seems to me. Let's see. Looks like the markets are moving. The S&P, it's rebounded, trying to go back up. And, on the weekly time frame, the market is still bullish. But, considering how long it's been bullish, where is the first point of a pullback, a meaningful pullback? When's the rug going to be pulled on us? But anyways, I think I went on long enough here. Hope this helps. Trade safe, trade smart, and hopefully get a video out here to you soon. Thank you.